Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Hello, everyone. This is Anthony Sykes, and you're listening to RantRadioNetwork.com. And I invite you to give me a call at 855-693-4897. I want to hear what you think about taxes. This show is all about taxes, tax planning, tax tips, and business, and we try to have a little fun with it all. What I want to talk to you today about specifically is give me a call, or you can email me and I'll answer your emails on the next show. Email me at asykes@sykesaccounting.com or visit my website. Sign up for the free newsletter. There are some interesting tips on that newsletter. This week, what we have is really a couple that is, I guess, timely for taxes. One of them is how to cross-promote your business. And that is, what's cross-promoting? That's how you can take a compatible business, one that works with you. So you have a florist and you get together with a restaurant or a cafe and you offer to, for a discount, put flowers on the tables or a floral arrangement. And if people like it, they will ask, where did you get those flowers from? And they refer you over. That's sort of a cross promotion of business. And my article on my newsletter, it talks about that. So another one is also a timely item, and that's if you have a business, it's a home office business deduction. More and more people are starting a business lately, and you need to take advantage of all the tax tips out there available to you. The reason being is you should only pay the amount of taxes that you are due. IRS is very diligent in having more audits. The number of audits are up, but that shouldn't scare you. If there's a legal deduction, you should be able to take it and not be afraid of taking it. You just have to have the proper documentation and the knowledge. So be aware that home office deductions can be something, maybe a portion of the phone rather. Also, you need to set aside a certain amount of your home or your apartment. You just can't, take a dining room table. This is my office. Nope, it has to be a set area that is your office. So anyone walking in knows that that's the office. But the benefits are great because you can take a portion of the rent or of the mortgage or of your utilities, insurance, and so on. So if done correctly, that home office is a great start in order to get a larger office if your goal is to move into an office building or something like that, or if you just want to work out of your home, which a lot of people are doing more and more lately. Now, this week, kind of give you an idea of where I'm going to be. I'm doing a tax seminar. I'm going to be a presenter on tax laws affecting small businesses. And that's going to be at the Baldwin Hills Crenshaw Plaza. It's 3650 West Martin Luther King Jr. Boulevard, Los Angeles, 90008 in the community room. I invite you to go. It's going to be in the morning. It's going to be this Thursday. That's this Thursday, March 14th at 9 to 11 a.m. You can contact Pam Bizzell, Bizzell, at 323-789-4515. And she can help you or make a reservation for you. So when you show up, I tend to have a good show for everyone, a lot of information. So I hope you can attend. If you can, You won't be disappointed. Now, getting back to the newsletter, because I think I want to talk a little bit about all those things we offer to you, the public out there, for free. And I'd like you to take advantage of that. In the newsletter, I have a section that has tax tips, but I also have a section that talks where you can, a tax calculator. Let's say you want to find out how many dependents should you claim on your W-4. I have a calculator for that. If you want to see what who your congressperson is, you can go in and look that up on the website. So it's a very user-friendly website. It has a lot of information. I invite you to take a look, just to stroll around. We take on new business. We have a lot of experience in a lot of industries. Come take a look at us. That's www.sykesaccounting.com. Now, I'd like to talk about, because it's tax time, and one of the things, I had a person from email me last week, Kirk, and he wanted me to talk a little more about the identity theft. He's unfortunately been a victim of identity theft, how it works, and so on. Well, if you've seen in the news, a lot of people have their identity stolen, sometimes posted on the internet, and so on. The way it works is that someone somehow gets your Social Security. It's a little different than the financial type of identity theft, in which they are stealing your Social Security, maybe your birth date, and getting loans or credit cards and so on. Although that can happen too. This could also be maybe icing on that cake. What these thieves are doing is, by stealing your Social Security, possibly your birth date, they are filing a tax return under your name using false dependents and possibly false income, and generating a refund, a substantial refund, $5,000, $10,000 sometimes, and that money is going to them. Well, what happens is, when you file your return, IRS says, hey, you've already filed the return, you got this refund, what are you trying to do? And then you find a whole lot of things that you have to do, forms you have to fill out, just to prove that you are who you are. So again, these tips from IRS, you guard your personal information as best as you can. Never give your Social Security number over the phone if you can possibly help it. Never leave it unguarded. Never write it down. Never leave it on your desk if you're at work, if you can help it. Never leave it out where anyone can see it. Watch out, and this is one way that they do it. IRS impersonators. IRS generally does not call you up on the phone and ask you for personal information. They may call you, but it's usually saying, Mr. and Mrs. Smith, or Mr. Smith, or Ms. Smith, we think that you owe this amount of tax, and we'd like to know how you're going to handle this. That would be that call coming. Or, we have not had a tax return from you in X number of years. How would you like to do this? Or they may have a personal visit, knock on your door, show up. We want to know how you're going to deal with this tax debt, or how can we assist you in filing these back tax returns. The other way, what's called phishing, you may get a email. IRS does have email capability. However, they do not send out emails randomly or to individuals asking for information. So if you receive something from IRS, be very, very cautious. I would say delete it. I would say actually send it to IRS if you know how to do that. But do not open it. Do not answer it, because that could lead you down the path of identity theft. Now, what those emails typically do is say, we are trying to match up your refund. So if you haven't paid, if you haven't filed yet, then how can they give you a refund? And they ask, please give us your birth date, your social security number, a bank account because we want to direct deposit it, asking for all that information you don't want to give. So be very, very careful about that. Now, if that does happen to you, notify IRS as soon as you can. They will then give you a form, and I forgot the form, but I can give you the number for it because they created a specialized identity theft unit. It's 1-800-908-4490, and then they will ask you to fill out a form. They'll send the form to you because obviously they don't know who you are, and that takes you on the road to getting your identity back under the eyes of IRS. And what they will eventually do is issue you a special PIN number, and that PIN number goes on your tax return so that when you file your taxes, it has that PIN number on there, and they know that's you, and then your return will process without any problems. Now, as I said, IRS has assigned. They created a new department. It's about 3,000 people in that department. They took them from audit. They hired new people. Identity theft is a huge item with IRS. Now, let's talk a little bit more about some of the things that you can do for this tax season. Barter income. How many of you sort of trade your services or trade your product with someone else and say, look, I really like your product, but I don't have the money, or I'll trade you this for that. And we'll talk a little bit more about that when we come back, because bartering income is a hot item with IRS also. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
What up, foodie freaks? It's Chef Bev Lazo with the Culinary Trend Show. Join me and my brigade every Thursday night from 8 to 9 p.m. where we will be cooking up some crazy stuff that will give you the appetite for discussion. It's all about the good food, good friends, and good times. Only here on rantradionetwork.com.
Hi, I'm Aaron Michael Sanchez.
And I'm Kelly V. Dolan.
And we are excited to announce our show Live with Aaron and Kelly is on Rant Radio Network. What do we talk about on our show, Kelly?
We talk about everything from entertainment to business and tech, and we have a few laughs in between.
That's right. Go check us out on rantradionetwork.com. That's rantradionetwork.com.
Check it out. Welcome, everybody. I'm Dawn Garcia of ATOD Magazine, and this is my brand new show, A Taste of Dawn, where we'll talk about everything related to savoring life. You can catch me on rantradionetwork.com every Tuesday and Thursday from noon to 1, where we're going to discuss food and wine, arts and entertainment, music, travel, leisure, and anything in between.
The Three Guys Rant with Arvin, Mike, and Phil. Coming to you on the Rant Radio Network every Monday from 6 to 8 p.m. Pacific Standard Time. You can call us at 855-69 The Three Guys.
It's not The Three Guys. This is why you should turn in, because one has Tourette's, the other one's illiterate.
You really should listen, then you never know what's going to happen.
855-69 Three Guys. G-U-Y-S and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
Looking for a delicious, fresh family meal that's ready when you are and easy on your budget? Welcome to Piara Pizza. We make our pizzas with handmade dough, 100% real cheese, and tomato sauce blended with our own spices. Nothing is ever frozen. We always have large pepperoni and cheese pizzas fresh and waiting for you for only $5. Or choose one of our specialty pizzas. We have veggie, meat lovers, supreme, and Hawaiian. Add an order of our amazing hot wings, cheesy bread, or breadsticks. Our locations are ultra modern, ultra clean, and open 7 days a week. Visit any one of our locations today, or check us out on the web at www.piarapizza.com. Piara Pizza. Fresh, hot, and ready for you when you come in. Stop in for your Piara Pizza today.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back to the Rant Radio Network. I'm Anthony Sykes. Give us a call. I want to hear from you. 855-693-4897. One bit of information this week. If you own a corporation, you have until Friday to file your corporation tax return, whether it's an S corporation or a C corporation. And I intend to talk about entities in another episode. But if you do not have your taxes ready, you can always file for an extension. An automatic 6-month extension will mean the last date for filing is September 15th, give or take. I don't know if it's on a weekend, then it would be the first business day after that. So remember, if you have a corporation, your taxes are due this week. If you need help, give me a call, 562-864-2341. Now, I was starting to talk about barter income. Barter, as you may know, is when you don't actually exchange any money for your goods or services, but you exchange your goods for your services. So, Mr. Farmer, he may exchange some of his crops for going to the dry goods store for clothing or something like that. They call it an even exchange. Under the eyes of IRS, that really is a taxable event. So you have to be aware of that. Bartering income, there are exchanges in which people come and get together and actually trade their goods or services. They have established a rate for that. So let's say 2 hours of tax work may equal an expensive dinner. I like to think so. So that's how that would be worked out. Now, it's issued on a Form 1099. So the value of the service that you gave would be issued and on a 1099-B for barter. The other person receives that. They count that in. If they're a sole proprietor, of course, it goes on their Schedule C. If it's a corporation, it's included in the gross income area on the corporation. If it's an LLC, again, in that gross income area. Now, barter income, you trade dollars. Some of these organized exchanges have created it to where there's a barter dollar. So each dollar, again, represents a unit of goods or services, and they work pretty well. I've never belonged to a barter exchange, never really got into it, mostly because I just haven't found one that worked, or I just was not necessarily interested. The tax implications of that is, again, IRS looks at it as income. It's income in the year that it occurred. So, again, if we're bartering services, if I trade you 3 hours of tax work for 2 bags of groceries, that's income. And I need to report that for 2013. So always keep that in mind. Sometimes, if you are a sole proprietor, that also includes or can include that bartering income will be subject to self-employment taxes, just like it would be if you earned that money. If you were an independent contractor, whatever, it's subject to self-employment taxes depending on what you're bartering. If you're giving, let's say, a couple tires for something else, there's an excise tax involved, so you have to be aware of that. Now, the reporting rules, and I'm going to read this from here. It depends. It varies from place to place, but generally, it's taking place between individuals. It's going to go on your Schedule C. If you do have a corporation, then that corporation is going to report it on the income line. Mortgage debt. And I wanted to talk about that because a lot of people, this has been a very tough recession. Oh, I have a call here. Let's see, we have someone on line 1. Hello?
Hello.
Yes, who am I speaking
Hi,
to?
yes. Hi, my name is Maggie.
Hi,
I
Maggie.
just have a quick question,
Okay.
and it's probably off topic because I know you were going to go into like mortgage stuff right
No,
now.
my topic is whatever you want to talk about.
Oh, okay. Yes, I used to work before, and I stopped working like in 2005.
Okay?
But I have taxes that I owe back then. To pay that off, do I contact the IRS or? I don't work anymore, and it's
Okay.
been 8 years already.
Okay. Yes, you do need to contact the IRS and set up a installment agreement. They're fairly nice about it, and they try to fit in your budget depending on how much you owe.
Oh, okay.
Yeah.
So they do like payment plans, or is that something that I would talk to them about?
They do payment plans, so be prepared to know how much you can afford to pay. Yeah, I like to tell people to be a little proactive. So if
Okay.
you think you can pay only $25 or only $50, and again, there's a range. It depends upon how much you owe. But you tell them, hey, I can only afford $25. I can only afford $50. I can only afford whatever. They'll see if they can fit that in. If they can't, they'll tell you, and then you kind of have to work with what they do. They'll try to work with you. But
Oh, okay.
yeah, so
Okay, sounds
Okay.
good. Thank you very much.
thank you. Hello? You there? Hello? Hello? Oh. Well, I'm sorry I missed you. Call us back. Anyway, we're talking about mortgage debt forgiveness, and that can happen in any number of ways. You can lose your job. You can become unemployed any manner of ways, or you had one of those bad mortgages that just went out of control. Your house went upside down and you can't refi or anything like that. So anything can cause that mortgage problem. And a few years back, Congress said, okay, we're going to give people a way to help them out of this debt or help them out of this problem, because typically you could not write off your mortgage debt. It was going to be income. If you have cancellation of the debt, whether through foreclosure or whether through a short sale, whatever, they issue you a 1099-C for cancellation of income. That was reported on your taxes as income, which was, it's kind of cruel. Here you are already in trouble, and now they're piling on saying, hey, you have to pay income on something you never received and for a house that you no longer live in. But that's how the law worked. Congress, I felt, didn't do a very good job of kind of publicizing there was this help for people, but the people in my industry, we did a good job of getting that out, helping our clients when they came to us and said, hey, look, I lost my house, I did a short sale, what can I do? And with a little research, we came up and found this is what Congress had enacted, what IRS was allowing you to do. Now, kind of repeating myself, when debt is canceled, whether mortgage debt is canceled, normally it's taxable, but it could be excluded under the law. This year is the last year that this is going to happen. So be aware of that. I'd hope that they would extend it, but they didn't. When we went over the I guess the fiscal cliff, one of the things that was given up was the fact that this cancellation of debt form. Now, to qualify, the debt had to be the mortgage debt had to be to buy your home or substantially improve it, basically to remodel it. The money had to be used on that personal residence. It had to be your personal residence. It had to be used on your personal residence. There was a maximum amount that would qualify for this debt. And it seems like a lot, but in California, we have big numbers. The most that could be excluded was $2 million. And that is a big number. If it's married filing separately, it's cut in half to $1 million. The mortgage debt that could be excluded, it could come from whether a short sale or an actual foreclosure in which they then issued you a 1099 cancellation of debt, and the bank then wrote it off its books and sort of charged you. That's what it means with that 1099-C. Also, if you could qualify for that exclusion if you refinanced, if it was a refinance mortgage and the proceeds went to buy your home or your new home or remodel that. And I've said it again in a different way, but it's limited to the amount of your old mortgage. So let's say you had an old mortgage of $100,000, and then houses went up, you took out $400,000, and you used it to remodel. You may have a limitation. It may go back to that $100,000. So you have to be careful. There's some rules in there that you have to watch. The proceeds from that finance debt, if you refinance, you can't use it for anything else. That would not be, that's not qualifying for the exclusion. We'll talk more about that when we come back. Rant Radio Network. Thank you. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
Hi, I'm Aaron Michael Sanchez.
And I'm Kelly V. Dolan.
And we are excited to announce our show Live with Aaron and Kelly is on Rant Radio Network. What do we talk about on our show, Kelly?
We talk about everything from entertainment to business and tech, and we have a few laughs in between.
That's right. Go check us out on rantradionetwork.com. That's rantradionetwork.com.
Check it out.
The experts know that for pastry, Baker's Bodega has it all. Exclusive brands like Westco Bankmark, Satin Ice, and Pastry Pride. One-on-one day seminars for cake decorating and gelatin art. So for our service, wide range of ingredients and supplies, and for the low prices, Baker's Bodega has it all. But you don't need to be an expert. Baker's Bodega, 7869 Paramount Boulevard in Pico Rivera. Come, we're waiting for you.
We are the Three Guys Rant with Arvin, Mike, and Phil. Coming to you on the Rant Radio Network every Monday from 6 to 8 p.m. Pacific Standard Time. You can call us at 855-69 The Three Guys.
It's not the three guys. This is why you should turn in, because one has Tourette's, the other one's illiterate.
You really should listen in. You never know what's going to happen.
855-69 3 guys. G-U-Y-S and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
Welcome, everybody. I'm Dawn Garcia of ATOD Magazine, and this is my brand new show, A Taste of Dawn, where we'll talk about everything related to savoring life. You can catch me on rantradionetwork.com every Tuesday and Thursday from noon to 1, where we're going to discuss food and wine, arts and entertainment, music, travel, leisure, and anything in between.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back to Rant Radio Network. Give us a call. I'd like to hear from you at 855-693-4897. What we were talking about was mortgage debt forgiveness. And that happens, that's a tough one. People losing their houses, foreclosures are leveling off, but there's still a lot of them, and there's still a chance that you can not have to be punished after losing your house, and that's what I'm talking about. The Form 982 is the form that you would use to reflect this debt and therefore not have to pick it up as income. Now, where I left off was there are some rules. If you refinanced your mortgage, you can't use any of that refinance money. If you do, it's not excludable. So that part of it would be money that you would pick up for as income. Excuse me, but you can't have used that refinance mortgage amount for like credit cards or pay off credit cards or pay off debt or anything. It has to be used on your principal residence. So unfortunately, hindsight is great, but at the time you do it, it's a great idea. People tell you all the time, refinance your house, pay off all your credit cards, and therefore you have really less debt. That's a great financial planning tool. Unfortunately, if you lose your house through no fault of your own, then that monies that you use to pay off your debt, pay off your car, pay off all other things other than your principal residence, that is going to be income to you. So please be aware of that. The Form 982 is designed for that kind of debt. It's a fairly simple form to use. You put on the amount that after you've done that calculation, you then show the amount of debt that you're going to exclude from income. You have to keep good records. If you are examined, that didn't come out right, did it? If you have an examination from IRS and you're audited, then you have to show how you calculated what debt is to be excluded on that form. Other types of debt that don't qualify, I've said was on credit cards, but also rental properties, second homes. So this is very specific. It is only to help you in the loss of your principal residence. If your lender had reduced or canceled at least $600 of your mortgage, they would usually, not always, send you a 1099-C for cancellation of debt. They also send a copy to IRS, so therefore IRS is looking for you to report this on your taxes. If you think it's incorrect, please, you need to notify that lender right away by, calling, writing, whatever. You just don't ignore it and say, it's not right, because IRS gets it, and once they do, the wheels start turning. From their standpoint, if someone issues that 1099, it must be income until they retract it or you found another way to show them differently. Also, sometimes that 1099-C can be issued for an abandonment. Basically, you walk away from the property and you say, here, I can't sustain anymore, take it back. That's an abandonment. Sometimes it's on a Form 1099-A as an apple. That may or may not be reported to IRS as income for you, but most definitely, if that 1099-C, if you receive it, you need to do something with it. You need to think about that. It can be a complicated area. Therefore, if you get it, please talk to your tax preparer or give us a call. We're more than happy to help you with it. Now, I'd like to kind of go from something fairly serious to a little interesting tax craziness here. One of the things I like to do is search the country and the world, if possible, for kind of crazy tax acts. This one I found in Denmark, in Ireland, and it's a European tax. I could not find when it was enacted, but I did find when, and it's still apparently a live tax law. So to give you what it's about, there's a tax on cow flatulence, basically cows that have gas. And I'll read you in part. The tax on cow flatulence has been proposed in several European countries in recent years, including Ireland and Denmark. The Irish variant, which ultimately was defeated before it became law, called for a tax of $18 per animal. The Danish proposals were even more stringent, and that was as high as $110 per cow. The reason why they did this was because they being the legislatures, said that these cows produce greenhouse gases, and they were trying to tax it. Basically, they were all trying to bring in additional income. That's the reason why they're taxes. Now, to give you an idea, the Danish Commission had said that a cow would emit 4 tons of methane gas a year, whereas the average car emits just 2.7 tons. So they were saying a car emits just half of that of one cow. Therefore, they need to tax the cow for all that flatulence. So how about that? Now, let's head back to something a little more taxing here. That was my deal with weird taxes from around the world. Next week, I'll try to have another one for you. California. California had a break for... Oh, let's pick this up. Hold on. Hello. You there?
Hello?
Yeah, you there?
Hello, Anthony.
Yeah.
I have a question. I know next month in about 30 days, tax cutoff is about to happen. What happens if I can't pay my taxes by April 15th?
You can always make an installment agreement. I would advise that if you can't pay, you should at least file. The extension is for filing rather than paying. There's no extension to pay your taxes, but by filing by April 15th, you at least will avoid the failure to pay penalty. What that is let's say you owe $1,000 and you wait until June to pay it and file your taxes. Even if you have filed an extension, you will have a penalty for failure to pay the $1,000 tax because it wasn't paid by the due date of April 15th. So if you file your taxes April 15th, they send you a bill, you call them up, say, I'd like to set up an installment agreement. Fine, they will do that. They work with you fairly easily.
Okay.
Okay?
All right, thank you.
All right, thank you. Okay, thank you for calling in. Again, if you have any questions, give us a call. I want to hear what you think. I want to hear your questions. Give me a call at 855-693-4897. Thank you. What I was about to talk about was California had I guess an interesting loophole for small businesses, and that was if you sold your business and you sold the stock in your business, you could get that stock could be excluded from the capital gains tax in California, or at least up to 50%. This year, a judge struck that down, and it kind of affected, well, it affected most of entrepreneurs and investors, because a lot of the people who were angels and who were, I guess, what do you call those, capital ventures, used that loophole in order to fund their next project. As an example, let's say someone had an idea and they were venture capitalists. So they put in several $1 million into this project. The project took off. It came time to get their money back. They sold it, and let's say they put in $2 million. They got back $10 million. So that's a profit of $8 million. Well, by selling the stock, they then could conceivably reduce the taxable amount from $8 million to $4 million, of which would be counted as income because they invested into a new project. It worked. In order to get new investment, that's what you had to do. What the judge said in his reasoning for disallowing this or striking down this law was it put California resident investors at an advantage over non-resident investors because they could not do that. That's kind of interesting. We'll see, because they're trying to get a law passed. A couple senators, a couple big investors had put it together, and now they're going after it. We'll see you after the break. This is Anthony Sykes. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
What up, foodie freaks? It's Chef Bev Lazo with the Culinary Trend Show. Join me and my brigade every Thursday night from 8 to 9 p.m. where we will be cooking up some crazy stuff that will give you the appetite for discussion. It's all about the good food, good friends, and good times. Only here on RantRadioNetwork.com.
Hi, I'm Aaron Michael Sanchez.
And I'm Kelly V. Dolan.
And we are excited to announce our show Live with Aaron and Kelly is on Rant Radio Network. What do we talk about on our show, Kelly?
We talk about everything from entertainment to business and tech, and we have a few laughs in between.
That's right. Go check us out on RantRadioNetwork.com. That's RantRadioNetwork.com.
Check it out.
This segment's sponsored by Mucho Macho Michelada. Whenever you got to spice up your beer, Mucho Macho Michelada is for you. Only real men.
Did you say mucho macho?
Mucho Macho, baby, where the real men come to drink.
Hey, I don't always drink michelada, but when I do, I drink mucho macho michelada.
If only Arvin could be a little more mucho macho.
Will it put some hair on my chest?
No, but te quema entrando y saliendo.
We are the Three Guys Rant with Arvin, Mike, and Phil. Coming to you on the Rant Radio Network every Monday from 6 to 8 p.m. Pacific Standard Time. You can call us at 855-69 The Three Guys.
It's not the three guys. This is why you should turn in, because one has Tourette's. The other one's illiterate.
You really should listen in. You never know what's going to happen.
855-69-3-GUYS. G-U-Y-S and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
Welcome, everybody. I'm Dawn Garcia of ATOD Magazine, and this is my brand new show, A Taste of Dawn, where we'll talk about everything related to savoring life. You can catch me on RantRadioNetwork.com every Tuesday and Thursday from noon to 1, where we're going to discuss food and wine, arts and entertainment, music, travel, leisure, and anything in between.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back to the Rant Radio Network. Give us a call, 855-693-4897. And again, send me an email if you have a tax question, or if you're interested in a business tip or something, and I'll answer that on next week's show. I'm always wanting to hear from you. This segment, I'd like to talk a little bit about deductions. We still have about 30 days left. This is the week for corporations to be filed. I want to make that clear. If you have a corporation, whether it's an S corporation or C corporation, it needs to be filed this week, or you have to put it on extension. Otherwise, you're going to have penalties. Now, if you have a S corporation, those penalties mount up very fast. It used to be very small, like $50 per shareholder. But now it's about $200 per shareholder, and you go a couple months out, that's about $400. So please remember to file your taxes or put them on extension. I like to talk about deductions if you're a realtor. Everybody knows a realtor. Real estate is coming back, and for those who have just getting into being a realtor, or if they've been a realtor for a while and they've kind of weathered the storm, here's some tips or some things that you can take, some that you may know, some that you may not. But from the sales part, of course, there's advertising. Now, what is advertising? That could be your cards, that could be a sign, that could be a billboard if you could afford that, a bus bench, something like that. The appraisal fees. Let's say to get that business, you pay the appraisal fees. That's a tax deduction for you. Bank charges on your account. You need to keep a separate account for your business. This is a business. So you have a separate account for your real estate activity business and a personal account. So when your commissions come in, you put it into that real estate business activity account and write yourself a check into your personal account. So those bank charges on that business account are deductible. Clerical, if you have someone typing up for you or on the computer working for you, that is deductible. Now be careful, because they could be an employee. Now, if they work for an agency, or if they have several clients, let's say they come in and they work for you for a couple hours, then they work for another for a couple hours, and so on, then they are an independent contractor. We talked about that. If you just work exclusively for you as your person, as your assistant or whatever, they may be a employee, and you may have to deal with employment taxes and everything else if you don't watch out. Now, client gifts. Of course, you can take gifts, but you have to be careful. Typically, gifts are to be limited to $25. A courier service. If you have to get documents rushed across town, and they have to be original documents. Of course, there's email and everything else, but if you have to have original signed documents and you use a courier, that is deductible. Commission fees. So if you pay a commission to someone, a referral commission, something like that, that is a tax deduction for you. The escrow loan fees, if you pay those, that is a tax deduction. If you pay a referral fee, that's a tax deduction. However, remember, if you pay more than $600, you may have to issue a 1099 to that person. So let them know. If you give them a trip to Las Vegas, I talked about it earlier, that might be bartering income. You still may have to issue a 1099. So be careful how you do it. If you need some help, you have a question, you need some consulting, give us a call, 562-864-2341. Film processing. Now, that doesn't happen very much now in the digital world, but it was a tax deduction. I don't know if you can find actual digital, film. But if you do have a camera that you use to take photographs, and I suggest that you do, of the properties you have for sale, you make a video, that all is tax deductible. The flowers or cards that you may send to your prospects, to your clients, of course, keep that. That is tax deductible. An office expense, buying paper, buying all the things you need to run your office. Real estate agents have an interesting opportunity because they are independent contractors. They have an office that they can use at work, and sometimes they have an office that they can use at home, and they are by law independent contractors. So they do not have to deal with that, if I have this or if I have that. By law, they are considered independent contractors. Open house expenses. Let's say you buy a platter of food, or you cater food in, you get your prospective buyers in. All that is a tax deduction. Rent. Now, if you are paying rent in that office that you're in, of course, that is a tax deduction. Sales assistants. Again, be careful. They are tax deductible. That's not the issue. They could be considered employees if they work for you exclusively. So you need to make sure of how you set up this agreement, how you have them working, and so on. Software. I talked a little bit about that earlier. Your digital camera taking videos of your properties, creating your website, putting all that together, and actually having the public, having your prospective buyers look at this instead of you driving them around town. Now, the mileage is deductible, but what you want to do is let them tell you which of those particular properties they're interested in. Instead of going to 5 different properties, maybe you only need to take them to 2 that they are particularly interested in. So that's something to look at. Tools. Well, in case you happen to be handy or something, a small tool, screwdriver, whatever, to kind of fix up a weak lock or door or something like that, that would be tax deductible. Stationery, of course. You need that stationery to have your name as realtor and so on. Now, the professional part of it, your dues, your E&O insurance, you must have that. Otherwise, something bad could happen and you would be left out in the cold. Legal fees. Well, hopefully you don't have too many legal entanglements, but that always happens. Licenses, all the licenses that you need, plus the continuing ed that you need to keep them current. That is tax deductible. Memberships, if you join a networking group, if you are a member of a multi-listing agency or so on, that would be tax deductible. The multiple listing is what I was trying to say. That's tax deductible. Publications, if you subscribe to different publications that maybe help you get ideas on how to stage a home and garden or whatever, give you ideas on how to set up that curb appeal or that home appeal, so when they walk in, it's, wow, I really want this place. Seminars. If you are attending those seminars, again, for your education, your continuing education. Resumes, you want to change agencies. Resumes are tax deductible for anyone who is looking for a job, not just real estate agents. Now, telephone. Telephones have come a long way in a short period of time. Your cell phone. Always, that's what keeps you going. Your cell phone has now become more than just a telephone. It is a smart device. You need to be able to, you can use it as your GPS, You can go online, you can look things up. So keep track of all that. That is definitely something you need to know. Equipment. You buy a desk. You buy your calculator. You need to figure out, how you're going to make this property work for them. A filing cabinet, not so much, because if you scan your documents, you now keep them on maybe a flash drive or something so that you keep them handy. If not, you still need a filing cabinet for those hard documents, those real documents that you have to have an actual signature. So don't toss out that file cabinet just right away, but you do have to keep those up. I've gone over most of these. Some that I have left out, sometimes wardrobe. If you have, there's some companies that have a certain color jacket with the emblem and so on. That would be tax deductible to clean. Certain clothing that you wear, you want to be presentable to the market that you're trying to sell. So keeping those clothes clean, buying the new clothes, part of that could be a tax deduction. So you always want to be there. If you have any other questions, you can give me a call on that. But in the last few minutes here, I'd like to talk about my seminar coming up in the Baldwin Hills Crenshaw Plaza on the 14th. Give me a call at 562-864-2341. If you have a tax question, if you'd like to attend that seminar, call directly to Pam Brazil, Bizzell, 323-789-4515. And visit our website at www.sykesaccounting.com. Take a look. Again, this month in my newsletter, I'm giving tips for small businesses how to cross-promote a business. So we all talk about networking. This is a way to network. You look at a business who is that you want to do business, who has customers that you like to have. They have customers that you'd like to have, and they'd have customers, so you kind of talk to each other. That always works. And again, the home office business deduction. So until next time, this is Anthony Sykes on the RantRadioNetwork.com. I hope to hear from you. Thank you. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.